Crypto is crazy right now. We've just seen a crazy bull run of thousands of percent across thousands of coins, followed by a manic crash of a minimum of 50% of most coins out there. If you're not selling your crypto, you're probably thinking about buying some. But before you do, you ought to know the basic rules surrounding tax and cryptocurrencies, especially since Biden seems so keen to crack down on crypto. So that's what we're going to talk about today. At the end of the video, I'll even tell you the only legitimate way to avoid paying taxes on your crypto gains. I'm Max, this is Stoic Finance, and today we're talking about crypto taxes in the US. The first thing to note when talking about crypto taxes in the US is that it can be taxed as capital gains or as ordinary income. Capital gains is the obvious one. If you buy Bitcoin at one price and sell it at a higher price, you have made a capital gain, and that gain is taxable. If you're investing in crypto, trading one crypto for another, buying or selling a coin, then you are going to be subject to capital gains tax based on your profits. If, on the other hand, you're mining Bitcoin or some other coin, receiving interest on any crypto you own through a site like BlockFi, staking your coin if it is Ethereum or Cardano, for example, or if you've been given any crypto as payment for work like a job, then you'll be taxed according to ordinary income rules, most likely as someone who is self-employed. Now, there will always be a lot of people trying to avoid paying taxes by exchanging one crypto for another or by paying for things directly with a coin, but this is a really stupid idea and it will only get you in trouble. If you're buying on an exchange like Coinbase, they're going to keep hold of your data. They're going to have records of what you buy and sell and at what price, and if you try to hide from the tax man, the IRS will catch up to you. Some people also don't seem to realize that you have to pay tax on your crypto gains based on your taxable events. Now, these events are basically as follows: buying or selling any crypto with any fiat currency like the US dollar, trading one crypto like Ethereum for another like Bitcoin, using any crypto to purchase any goods or services, or earning any crypto as ordinary income like staking or mining. This means that you can't avoid paying tax on your gains by switching out your Bitcoin for Ethereum, or by using Bitcoin to pay someone to paint your house, or by exchanging your Bitcoin for a foreign currency like the pound and then back into the dollar. The other thing that's really important when looking at capital gains tax around crypto is the time period over which it's held. This is because in the US there are different tax rates for long-term capital gains and short-term capital gains. Now, long-term is pretty simply anything that is held for over 1 year, and short-term is anything that's held for less than 1 year. A lot of people see this as punishing those who choose to trade securities or commodities or nowadays cryptocurrencies, but I think it's really about rewarding those who choose to invest in things over a long time. This isn't an increased tax on traders, but a reduced tax on investors, because short-term gains are taxed at the same rate as ordinary income. So we're quickly going to look at the tax rates at the federal level and then at the state level. Now, for short-term gains, as earlier said, you're going to be taxed as if it were ordinary income. That means that you'll pay tax at these rates if you are single. This ranges from 10% tax for income just under $10,000 and 37% for income just over $500,000. Although this is likely to rise with Biden doing his Biden thing. If you hold your crypto for over a year, however, you'll be taxed at these rates of 0% up to $40,000 to 20% of your gains over $440,000. It's clear why so many people want to hold their securities for long periods, because these tax rates are just so much more favorable if you hold out a little bit. Now, in regard to tax from the states, obviously it varies by state, and we're not going to go through every single one in this video, but we will touch on some of the more important ones. Obviously, there are a bunch of states that don't charge any income tax or any capital gains tax on their residents, and they are Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. In these 9 states, all you will pay is what is required at a federal level, with nothing demanded by the states themselves. In California, however, at its highest rate, income is taxed at an extra 12.3% on top of what you already pay to the federal government. And capital gains is taxed at an extra 13.3% on top of what you already pay. It's no wonder people are leaving California when it's the most heavily taxed place in the country. So finally, how do you actually avoid paying taxes on cryptocurrency gains? Well, I want to reiterate that you can't get around taxes by swapping one crypto for another or by using your Bitcoin to pay someone to paint your house. What you can do, however, is use your IRA to protect yourself from that tax burden. Basically, you have to create a limited liability company that is owned 100% by your IRA. As the company is owned by your IRA, it will have the same tax advantage benefits as your IRA. Through this LLC, you can then open up an account on an exchange like Coinbase and invest in whichever cryptocurrency you want without being beholden to the same taxes that you would be forced to pay if you had invested in your own name. There are, however, a lot of intricacies to this, and it's actually quite complicated, so I'll leave a couple links down below which explain this in much more detail. Of course, if you want to do this, you probably ought to seek financial advice. This is just an educational video meant to spread awareness a little and should be taken with a grain of salt. I know this video might not be as interesting as my others to a lot of you, but I'm just trying to explore a few other niches to see what works with my channel. So let me know if you want more stuff like this to do with taxes, or if you prefer some other type of content. Thanks for watching. Until next time.